Hello everyone, my name is Gregory Schnese and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. They are not finance or tax advice. Today I want to discuss Bitcoin-backed mortgages and some new products that were just released at the end of March. Bitcoin Borrow Die is powered by Bitstack. Build your wealth in Bitcoin terms. Visit us at www.trybitstack.com. Now, the first version of this Bitcoin-backed mortgage is what we've talked a lot about in the Bitcoin Borrow Die strategy. It's really this purely Bitcoin or crypto collateralized loan where we're pledging Bitcoin as collateral directly. We will take out a loan against that collateral. Definitely not up to 100% LTV like Milo offers. That's way, way too high. We'd want to keep our LTVs down to like 10%, maybe 15%. But the point is we can pledge our Bitcoin, get a fiat loan from that, enjoy either interest only payments for the first 10 years. This is the Milo product. Or you can have it where the loan rolls. It depends on where you take out the loan. And then with the counterparty you choose, the Bitcoin can be safe in segregated custody, either like Coinbase, BitGo, Strike, Unchained 203. There's a bunch of different ways. But when you pay off the loan, you get all the Bitcoin back. You never sold it. You didn't trigger any taxable events. This is very similar to the Bitcoin Borrow Die strategy we've discussed a lot so far. But this is option one. It's always available. Option two, Model 2 here. This is the new product that was announced from Coinbase and Better. It's a Fannie Mae-approved and styled mortgage. And there's really two pieces. One is like the traditional mortgage that you would have for a normal house. And then the down payment part comes from a Bitcoin loan with Better. And then that loan is used as a down payment for the regular mortgage. So it's really innovative. It's very interesting with this two loan structure. And it allows Bitcoin to be collateral. But for this product specifically, you need to put down 250% of the down payment for the loan. So if you wanted a $100,000 down payment, you have to put up $250,000 in Bitcoin. And this is just kind of the similar strategy of an overly collateralized loan. And one of the reasons why they require this is that there are no more margin calls on this style of loan. There can be margin calls on the previous version that we just discussed. So this is a huge unlock, and it just treats this two structured loan product as one, and it's very similar to a regular mortgage where if you make the monthly payments, you're good to go. And the reason why they can offer zero margin calls is that it's overly collateralized Bitcoin. So you have to put down 250%, but then the house is also an asset backing the loan, and they can put a lien against the house if they need to. So their bases are very well covered, and then they can offer this with zero margin calls. So if Bitcoin drops dramatically, the mortgage terms stay exactly the same. The only issue is if you're delinquent for 60 days without payment, but this is similar to other mortgages. So this is a really slick product to get a loan, get liquidity out of your Bitcoin holding, and use it to buy property, to buy a home. There are downsides, of course. I mean, the rates are a little bit higher. You have counterparty risk with Coinbase, but at least you can have this option to get a loan out from your Bitcoin holdings. The reason for doing this, the reason for the Bitcoin Borrow Die strategy in general is that when you take out loans against your assets it's not income. There's no taxable event, which is huge. And you can model this out a few different ways, but you retain ownership of your assets and you don't have taxable liability. And then kind of looking at some of the pros and cons versus both versions is on the pro side, of course, it's a massive tax savings. We talked about this a lot. You keep compounding. We've talked about this a lot. You still hold the asset, which is extremely important. No cash down because you're using your Bitcoin as collateral. And as long as your counterparty is safe, you can work with them. Legacy is that you still hold the asset, so when your inheritors inherit your wealth, they receive it at a stepped up cost basis. But then looking on the con side is that rates are higher, at least for now. I mean, this should come down over time as Bitcoin is more recognized as pristine collateral, but you are paying a little bit more. But at least you can take out a loan against your Bitcoin to do this, so that's interesting. Volatility impact. So this is much more for the first version that we talked about, where you have to worry about margin calls and cannot be liquidated, and you have to be very prudent and manage that. For the Better Coinbase one, it's very interesting because if you just pay your monthly payment, you should be good to go. There's custody risk, that's kind of the flip side of safety. And then availability is just which states approve this, where can you actually take out this type of mortgage. But sort of looking at these as just a lender snapshot kind of across the board. So Milo, Unchained, Lending, Salt, these are the three ones. On the bottom are more the version 1 option we talked about, where you're basically putting up your Bitcoin as collateral, you're taking out a loan, you're using that loan to put down as a down payment for a mortgage in this scenario. And you have all of your margin call issues, not issues, you just have to be aware and cognizant of margin call and make sure you have additional collateral if you need to place it or to manage your loan. And then LTV limits as well. You'd want to keep these really low because then you have less worries for margin calls. But when you look at the Better Coinbase one, there are no margin calls. I mean, the LTV is kind of, well, it's not really even that high. You would want a high LTV regardless because you would want to put up a lot of collateral. They're requiring 250% so that you can get a lower LTV. So I don't really think that's much of a trade-off. It's just nice how they structured it where they don't have margin calls. And you can test both versions at bitcoinborrowdie.com. Run your own numbers. Let me know what you think. Like and share this video. Sign up for our Substack. And let me know what you think in the comments.